All right, this is Farm to Markets number 14, and today we are talking about the debt ceiling, if you should own gold in your portfolio, and John Deere or Kubota, which one is for you? The debt ceiling is a limit on the amount of allowable outstanding federal debt that the nation can have on its books. The limit was reached on August 1st of this year. Currently, the US Treasury has been undertaking what they call extraordinary measures to continue to finance the country, but predict that those measures will no longer be sufficient past October 18th of this year. Some have argued that this could cause financial Armageddon, while others think this is just overblown. Joe, what do you think?
Well, if you've ever seen the movie Men in Black, where the government officials every day are fighting intergalactic wars and the rest of us are completely ignorant, this is a good example of this, because every budget season we go through exactly the same thing, and we end up with exactly the same result, as both sides end up agreeing to raise the debt limit once again. The political difficulty is who's going to give up what? Are we going to means test all of our entitlement programs, that if you acted in such a way that you actually succeeded in America, we're going to give you less of the benefits which you've already paid for? We're going to take money away from veterans who joined up with the military in good faith that they were going to get paid a pension if they retired after 20 years of faithful service. How about Forest Service employees? How about Social Security recipients? The reason why we have to keep borrowing money is because we can't afford not to. There's just no way that we can balance our budget with our overly shifted towards the entitlement side of the balance sheet current federal budget without some real wailing and gnashing of teeth, and no politician is going to sign up for that.
Drew?
I agree. I think it's going to be tough to be a politician running on the platform that you're going to not raise the debt ceiling or suspend the debt ceiling and try to get spending under control. With that said, I think the debt ceiling is just a can that's going to continue to get kicked down the road until investors are finally fed up or the system collapses. I think that's where we're at. To me, talking about raising the debt ceiling or not raising the debt ceiling is sort of like complaining about whether the hangman has bad breath. I think you have bigger problems coming. I'm more worried about Congress's huge deficit spending, our fractional reserve lending system, and our fiat currency than I am about the debt ceiling that will invariably get raised. Eventually, the bills are going to come due, and I don't know when that's going to be, but I'm rather irked that we're putting this burden on our children and grandchildren instead of trying to do something about it now.
Right. It's just political theater. The Republicans want the Democrats to pass the debt ceiling through budget reconciliation. So at midterms, they can point them and say, hey, look how much debt you piled on the economy. Vote for us during the midterms. And that's essentially what they're doing. We did it in 2011. And for the stock market, it caused a lot of turmoil because there's going to be a lot of articles saying that this is financial Armageddon. And the markets are going to go up and down because people are going to be speculating that we might default on our debt, which I, like you guys, I think it's unlikely. I think it's just going to be a political brinkmanship so that the Republicans can get stuff that they want passed, and will eventually end up passing some sort of deal that raises the debt ceiling. Just some fun notes is that the debt ceiling was originally created under the what they called the Second Liberty Bond Act in 1917 to fund the World War I. And I believe at the time the debt ceiling was actually $1 billion. So that was the most they could do, was raise it. They couldn't raise it above $1 billion. $1 billion with a B dollars. Since then, though, the Congress has raised or suspended the debt ceiling 110 times since 1970. So debt ceiling is essentially is about as useful as a fork in a sugar bowl, because all it does is it's just, when I go on a diet and I'm like, look, I am not going to eat any donuts this month. And then I'm like, yeah, you know what? I've had a hard day. I'm gonna go ahead and eat a donut. It's arbitrary. So it's only as rigorous as people want to make it. Right now, the Republicans are just using it so that they can point to Democrats in midterms and say, here, look what you did, or they can use it to get it passed. And this isn't the first time stuff like this has happened. So, do I think, the country is going to default on its debt and everything, bad is going to happen? Probably not.
Well, I think what's going to end up happening is that it will just be another round of fiat currency circulation. It'll be just another, form of inflation, and with the offsetting deflation that takes place with technology and globalization, it might work out for people who have already got theirs. For folks who have already accumulated assets, all this fiat currency just flows to asset prices, and if you already own the assets, life's good. If you're in line waiting to buy those assets, well, life's not quite so good.
Okay. So the number one question I get asked from clients and from people who find out I'm a investment advisor, financial advisor, is if they should own gold in their portfolio. And then the second question I get asked is if they should hold physical gold. Drew, what's the answer?
I think the answer is yes, but the degrees vary widely. If I have motion sickness, I might take some Dramamine. But if I break my leg, I might not take Dramamine. I might take morphine or something else. So gold can certainly be a tool in a well-diversified portfolio. Whether you're a very young, aggressive investor or whether you're an older, conservative investor will dictate how much gold you ought to be holding. Now, those clients that wonder whether they should be holding physical gold bars or bullion, that's kind of a different scenario. It sounds like they're more worried that there's going to be an economic collapse and that they're going to have to use gold as a bartering tool. I'm not a huge fan of having all of too much gold on hand. If it makes you feel better, that's certainly okay. But you need to ask your neighbors how much they value your gold over your clean drinking water or your chickens. It may turn out that if the whole economy collapses, gold might not be as valuable as you think. Another thing to note is gold its price fluctuates just like any other asset, in that price isn't always dictated on its intrinsic value. Sometimes its prices move on investor sentiment or market projections or economic outlook, things like that. So the short answer is yes, hold some gold, but how much? That's a question that we'll have when the doors close in our office.
Joe?
Well, I guess the question is that should you own gold, you first need to know yourself. Are you an accumulator or are you a speculator? As an accumulator, gold has really been a pathetic investment. I mean, if you take a look at the price of gold in 1980, I think it was around $800 an ounce, and right now it's selling for what, around $19.50 or something like that. So it's probably had a rate of return somewhere between 3 and 4% after inflation, and in taxes, it's barely broken even in terms of keeping up with the rate of inflation and taxes. So it's not a great accumulation investment. Now for speculation, for those people who are technical investors, it might not be a bad idea to ride the trajectory both up and down with gold. But if that's the case, then physical gold is a horrible investment. To Drew's point, if people are just worried about Armageddon coming down and they envision themselves with a hacksaw cutting pieces of 8 out of their Spanish golden doubloons and trading it for corn starter feed, probably be better off just making sure you have good relationships with your family and neighbors, and you're involved in a good church, and you have good clean drinking water and chickens in the coop, because gold's probably not going to be that valuable to you in the Armageddon scenarios that most people envision when they ask these questions.
When I look at Venezuela and South Africa, like countries that are currently using a barter system, gold is not one of the primary means of exchange right now. Is it right now? I think is that I read a couple of things where people in Venezuela, they sell bananas and they don't sell them. They trade them for rice and coffee and flour. And same thing in South Africa. They're trading fish for medicine and other things like that. And gold and hard metals are not commonly seen in their barter system. It could be that they just don't have the discretionary money to buy precious metals. But at least in those countries, when their dollars actually did collapse and things are really bad economically, and they had to switch to a barter system, they're not trading metals, they're trading food medicine and ammunition and those kinds of things. It's important to note that with, having chicken eggs in your home is a pretty good investment, because what a lot of people don't know is that chicken eggs don't have to be refrigerated if you don't wash them. So if you have 5 chicken eggs, you can let them sit outside at room temperature for months, and you don't have to do anything with them. So you can give them you keep them, in a secure place, give them to your neighbors, trade them for, whatever they have. They have like apples or bread or something like that. A chicken egg would be probably more valuable if things get real bad than having an actual piece of gold that you have to break apart and carry around with you would be, in my opinion.
For the record, Tom, at the Shook house, do you guys both agree not to wash your chicken eggs?
We do not wash chicken eggs. No, well, I'll tell you what, is that if we're going to use them in the next week, I'll wash them, because it's kind of gross when you pull them out of that carton and they're all dirty and stuff. So if I know we're going to use them in the week, I'll go ahead and wash them. Otherwise, we keep them in the basement unwashed. So, and that's our essentially our gold policy at this point. Things get real bad, I'll give you chicken eggs. If I really need something, I'll give you the chicken. So we'll see what happens there.
I will agree with Tom. It is kind of unsettling when you go to make an omelet and you crack an egg and some feathers and feces falls into the bowl.
You don't want that. It's I like to think that it's mud. So in my mind, it's just some dirt on the egg, and then I'm more okay with it.
Right.
So living in Montana, I know plenty of people who own tractors, and some people own Kubota tractors, and some people own John Deere. And Joe, I think a lot of people know that you own a Kubota tractor. So I guess my questions are: one, what made you pick Kubota, and what would it take to get you to switch to John Deere?
That's an excellent question, and every prospective tractor buyer should ask themselves the same question. So, starting position is that who is the actual dealership who's going to be helping me service this piece of machinery for the next 2 decades? Now, here in Flathead County, we've got both a John Deere distributor and a Kubota distributor, and I just went and talked to both of them, and the Kubota guy just seemed to impress me more than the John Deere guy. I think they're both great machines. Just like Chevy and Ford, we can fight to the death over which one is better. But at the end of the day, they both have served farmers extremely well. I have a Kubota. I love my Kubota. But the service I get at the Kubota dealership here locally has been nothing but top notch.
And Drew, it appears that Joe's Kubota spends a lot of time in your carport.
It does.
Would you prefer that to be a John Deere tractor that's parked over there? Or
I get access to the Kubota, in exchange for parking it under my awning. So I'm not going to disagree. I'm a Kubota all the way. I don't want to lose that privilege. I do own a John Deere lawn tractor to mow my lawn, and I've been incredibly happy with that. I think you just kind of fall into a camp. We had lunch today with a gentleman who we asked the same question. He said, "Oh, John Deere, under no circumstances would I buy anything other than that." And the reason was his family's just been using it for farming for generations. But I'm sure you could get the same response from a Kubota person as well. Like my dad said, both great pieces of machinery. I'm a fan of both.
I'm not in a position where I would need any type of tractor on my property. It would be weird if Allison came home and I was driving a tractor around. Things would be wrong. So the only way I'm going to buy something John Deere or Kubota is if I bought the company stock. So I thought it might be fun just to kind of have a look through their financials and decide which stock I would own. And frankly, is that they are, financially speaking, they're pretty similar. Kubota is a smaller Japanese company, and you have to buy the stock over the counter. You can still buy it, but you have to buy it over the counter. But financially, relatively speaking, their finances are similar, and they pay similar dividends, and they're in the similar markets. But like I said, Kubota's a little bit smaller. If I had to pick one, I'd probably go ahead and buy John Deere because I don't have to deal with the over-the-counter market. I can just buy it on the New York Stock Exchange. And then two is that, like I said, John Deere is a much bigger company, has a lot higher revenue, is in a lot of different markets in the heavy equipment industry. So I'd probably end up buying John Deere if I had to buy one in my portfolio. If I had to pick between the two, if I didn't have to pick, they probably wouldn't end up in there anyways, because they're not exactly paying the highest dividends, and they're not exactly what I consider growth stocks. They're good companies, but if you're looking for a stable portfolio, it might be something to consider. But if I had to pick between the two, if I was going to buy one, it'd probably end up being John Deere, just for some technical reasons. But that would be my choice.
You should get a running lawnmower like Drew and Bobby Boucher.
Yeah.
Yeah. Bobby Boucher. Yeah.
The first thing he said to me when I drove it home.
Yeah, maybe. I mean, I'll have to look into that. Might scare the chickens though. Okay, well that's it for number 14. It was pretty quick today without Alex Musso, who is at home nursing an illness. So hopefully we'll see him back soon. But otherwise, we'll do this again next week.
All right, thanks.
Thanks.